Alrighty, Doc here from North America. Good morning, good afternoon, good evening. Got trapped there on a physics thing. Sorry about that. Let's see. Here we go. I'm getting this all started up. One moment I looked up, it was 20 after. The next thing I know, it was 30 after. So it just happens that way once in a while. Now let's get this larger, the Chicago Quant, right there. Let's go take a look at the Swiss this morning, especially after the news. The inflationary number came out just a little bit higher on the actual, pretty much targeted right where they were expecting, that 5 point and change. Sounds scary to me, but obviously no one seems to care. They started buying. Well, you buy stocks. You know, stocks are a good tool. I mean, gold used to be a great tool, and now you buy stocks. Of course, that seems to be the exact that would make total sense. I mean, the companies can raise their prices. That's what the key is right there. They can raise their prices, and when they can raise their prices, that basically compensates for the inflation for a short period of time. Because when less dollars start to chase fewer goods, then they start to slow that inflation down. And that's how that all plays out. In the beginning it's hot for the stocks, then it becomes cold for the stocks. It's a combination of both of those back and forth. So anyway, let's see what the chat line says. Let's see if we got anybody on the chat line this morning. Doc got a little lost inside his physics this morning. Let's see. There's the chat line. And see if everything's looking up. Yeah, I mean, like we're seeing the NQs now up at 38, so they probably felt pretty comfortable. The supply and demand, Dow Jones Industrial Average is up 60 now, and the S&P is up 6. So that's pretty good. They've jacked it. Let's see if we can put, and you can see, well, I guess it's showing strength here on the J4X, the Swiss. It's still showing the strength there. See a little curve here is going on. And we'll take a comparison of our work. Let's get to it right there. As you can see, it is a downwardly move now, trying to get back to that line probably in that area. We'll see how that goes. More than likely, this thing will do some type of projection like that. It's that downwardly slope, and they'll hit maybe the red dashes and then fall back down again. Just nothing major there in the sense of, are we seeing something really intense or are we not? Chances are not. This is the middle of the summer still. Now that on this side of it, let me just show you the equity market again. If they start to back off, we start to see them go back into the minus territory and moving back down for the day, then we're starting to hit that bumpy area in the August period where it starts to build a top. And so, with Jackson Hole next week, that will probably confirm more information, make everybody feel more comfortable about where they're going. In other words, not going to Jackson Hole, but where they're going when it comes to how they want to be invested for the last 2 quarters of the year. That's pretty much what it comes down to. And let me just see if I can find the Jackson Hole date too, when they start Jackson Hole. Let's see, Jackson Hole. There we go, Jackson Hole. Fed meeting. Let's see, there we go. And we're looking at the 26th to the 28th. So we got basically another couple weeks before this really straightens out, which is kind of probably good. May 27th. I mean, what happens, they all present, like the Federal Reserve Bank of Kansas City, the Fed chair's there, everybody's there, and they present ideas. This is a summer get-together. It's kind of like Davos in America in the summer instead of Davos in the winter in Switzerland. Pretty much that's what it comes down to. Probably more jets, not less jets. And so that's where Let's see, the Federal Reserve Bank of Kansas City is proceeding with its plans to host a modified in-person program for the year's Economic Policy Symposium. Macroeconomic Policy in an Uneven Economy in Jackson Hole, starting August 26th to the 28th, and everybody's been waiting for that for months now. They have an economic policy symposium every year there. Sometimes it's a little bit earlier. In this case, it's a little bit later, so it's dragging it out even more. All right, where do we go from here? As you can see, as I said, you can see the Swiss feeling the pressure there. It's in a good way for the Swiss, of course. It's going down. We can take a look at, say, something like the interest rates and see how they've jumped around here a little bit. Let's take a look at the 30-year. I think 30-year is off its high. Let's just, they control the interest rates so tightly that it's sometimes what it really takes is just time for it to go by. Now, I'm going to show you where the 30-year is, just for interest sake, because we are talking about inflation. And we might as well just, keep on that theme. And you can see here, there's the Swiss, and now we're going to jump over to the 30-year. You can see the 30-year pressing down, and it was a little bit higher, it was a little bit lower. It confirms, it allows the bond traders to feel more comfortable on what they're doing. Remember, people a lot of people don't understand or don't know. I think it's the same word, really. They just don't know. It's not that they don't understand it. Once explained, they understand it. But what it comes down to is that a company, a fund, incorporates, and they create a manifesto. It's an incorporated manifesto. And they say what they're going to do with public money or private money that comes to them to invest in their fund. And the investors read the manifesto, the incorporation of the manifesto. They read that and they go, okay, I'm going to invest because they will do X, Y, and Z, and here are the footmarks, and here is the description of how they're going to, invest and do and what, and so forth. It's an outline, and it's a very clear outline. And then what happens is that when those footmarks or points of market data happens, they must react the way they wrote their incorporation. If they don't, they can be sued. It doesn't matter if they're a fantastic fund and they're making tons of money for decades. People will sue them just to get money. My son works in that business. And so I see it from both sides. I see it from the financial side and I see it from the inside. And they will, sue. Now, obviously my son doesn't tell me any information on any particular company, but he tells me the public information about it, in the sense that, it could be a fund managed inside J.P. Morgan Chase, and at the same time, or Goldman Sachs, or any one of these companies, Chase, not Chase, we just said that, Citibank. It could be any of those. A fund managed inside these entities, and if the bank or the brokerage does something off course to the manifesto, they will sue them. And even the subsidiary of the major company, like the Goldman Sachs subsidiary, will sue Goldman Sachs. And the way they look at it is, well, they'll get some of that money back in their pocket. That's the way they work. It's crazy, and I know it doesn't it makes total sense, but I know it doesn't sound logical. But they do. That's the way they work, because it's easier to make money suing than it is to trading. So they're very quick to make a lawsuit out of something. So when you see this fundamental information come out, that's what Janos was projecting a couple years ago. How quantitative easing has disturbed the fundamental data. And he tried to describe how it is uncomfortable to trade nowadays during the QE era because it doesn't fit the structure anymore. And what happens is that it used to be information would come out, and it would have continuity. It would have consistency. There'd be conviction. I used 3 words there: continuity, consistency, and conviction by the funds to be in the position for not just 10 minutes, but to be in there for 10 hours, maybe 2 days, maybe 3 days, maybe 3 weeks. Now, in the quantitative easing era, that has disappeared. You get movements with inside a minute, 2 minutes, and it's over with. That's why binaries are so useful on a short-term basis for financial information. Before you can even get long, your position is already profitable and now is giving up that profit. And so a binary within a minute might make the money and go, or 2 minutes might make the money and go, depending on what the information is. So that's what binaries are really successful with, doing that. All right, so that's where we are. Now we see that the interest rates now are, the futures contract is going up, which means interest rates are going down, and inflation was just 5.4 versus 5.0 or something of that nature, and obviously it's not what it was supposed. I mean, it's pretty much what it was supposed to be, but it was firm. Best way to describe that is it was firm. And as you can see now, the S&P 500 is up 7.5 points versus that 6 earlier. And you can see the NQs are up 52 points versus being down 25. And then the Dow Jones Industrial Average, which is now up about 60 points, was down about 15 when it first came out. And so that's the action we're seeing there. All right, now we'll drift. This is a currency webinar, really, to begin with. I'm just trying to make you understand what moves currencies. And this is what moves currencies. And now you can see here, let's switch this again. You can see, let's do this. There we go. And move that over a little bit like so. And you can see the Swiss is moving down. The dollar is obviously going down. Now let's take a look at it in perspective of the euro right there. You can see the euro is moving up. So the Swiss and the euro are marching together today very well. And see, what else can we say about that? Not much at this point. And then we can go and check out that on JForex. Like we said, you can see ours is already moving down. This will switch on the Swiss in an hour or so. Could be as much as 4 hours, depends. On using the Hinky Ashies. They're a lagging indicator, but it's better than nothing. Whereas as far as I'm concerned, looking at the stochastics and the 2 stochastics fighting with each other, seeing how the white is curving, telling you that there's weakness. Whereas the Hinky Ashi is still not there. And then we go and check out the euro. Same situation. In this case, it should be the inverse. It should be red. See? It's red. And then when we look at it on the Chicago Quant, you can see we are already in a up bar. And you can see our line is moving up towards the 0 line, just like it is doing with the 2 fighting stochastics against each other. The relativic stochastics, I guess you could say. And you can see we're getting very close here to trying to get into a buy. And we're still got a red dot going on, just like the Hinky Ashi is. And we'll see how that rolls along. All right, traders. I hope that makes some things very clear there. That's how we drift in and out of other products. We're looking at the currencies, but we're trying to understand what moves the currencies. And I try to give you my solid interpretation from having a very successful mathematical formula to combining the 2 together, try to get the story correct. The stories are very tough nowadays. The accuracy of the stories really shift around compared to the actuality as time goes on. We find information comes out later on, and we find out that it might have been changed, and a lot of things go on there. But the stat is there. We can see what the government put out. You can see how the money reacted to it. And when I mean money, buyers and sellers of currencies, buyers and sellers of bonds, buyers and sellers of buy and sellers. And that's how that all works out in the end. All right, now we'll go run over to the cable and see what the cable's doing out of this adventure. We always try to start off with the three majors. And you can see cable's been moving down. But look at that nice spike that we're seeing there. Now we could go and look at it through Chicago Quant. More than likely, with that strong a spike, I would imagine we are on the edge of the buy side, if not in the buy side at this point. Yeah, look at that. It's very close. Same situation. Let's widen that out. You see it's very close, but still not through it. And you can see the weekly is playing around on the downside here. You can see that right there. Let's just change that to the next one. There we are. And so you can see that it's, as we had it here going into the buy, and we went right into the sell, so you couldn't be long. We've been kind of stuck in that neutral zone. Then we got the buy signal right, let's move that over one, right there. And then we went right back into the sell again. And that pressure has been on. It just doesn't seem to want to get going. The dollar has been very firm. You know, they're seeing interest rates with the potential to go up, so that automatically brings in the buyers. Inflation is starting to kick up. They want to run to the dollar, since the dollar controls the gold and the silver and so forth. Let's fix that too. There we are. And so that's the action we're seeing here. You know, it's trying to lift up. You can see the strength in it. We'll take a look at it over here on J4X. Same situation as I just pointed that out there. And both it and the Hinky Ashies and our red dots still. Both of them are in unison at the moment. All right. From there, what we do is we jump over to the Turkish lira. See what's going on with that. We felt that was a real bellwether of late, you know, just showing the sensitivity to the dollar's movements. It was kind of impressive, the spike that they put into it. We'll go over to the J4X and do that there first. Dollar lira. It looks like it's still firm. And it seems to be holding up in there. You can see this action here. And right there, we've got a red dot. Let's see if we can widen this out a little bit more. You see, as a matter of fact, give that a refresh. Yeah, maybe they clean that dot out. Yeah, they did. And you can see here, though, is we're very close to go back to the zero line from that low. And you can see the weekly not turned up yet. So we've got the daily turned up here, and the daily buy now 4 or 5 days, 5, 6 days, something like that. We'll count it in a few seconds. And we're going to run over to the, that's the wrong spot, let's move it down. We'll leave it up there with that. And so it's 2 days, 4 days, 5 days, going on a 6th day. And then we'll go run over to, let me just save that like that, save. And then let's go take a look at the euro against the Turkish lira. And put that up on J4X. Let's see, you're around here somewhere. There you are. And so in this case here, it's been interesting. It's fighting to stay in the daily buy. Same amount of length of time was at 2, 4, 5. This is 6th day. At the same time, we see the weekly just too far off for us to be that excited about all this action. Also, as much as the dollar pairs trade of the Turkish lira was able to take out these highs, notice that the Turkish lira euro pairs trade, or the euro Turkish lira pair trade, is refusing to go up after them. So it's missing some strength in there. And you can see the weekly, look how much it's well below the negative side of the time manifold. So between the two put together, they're not really being able to get this action going. It seems like it vacillates back and forth, you know. All right, and then from the what did we do? We just saw that it just shifted to the red. That's interesting. The Hinky Ashi just went red. See, it's kind of a laggard, the Hinky Ashi, but it does match up to dots over time. So you can see here, we had a red. Now it's just finally catching up to that red that we had. Whoa! I hate when I do that. There it is. And it's catching up to it. So that's what's going on at the moment. It's a lagging. Now, like we've told you many times before, whoever's watching, this here is the real game. This relativic stochastics combination. That's the most important thing of all. Okay, now let's jump over to the Canadian. You can see the dollar against the Canadian trying to move down. Matter of fact, it is moving down. It's been in a daily buy for like 5 days or something like that. And you can see we're in a weekly buy for a while. Let's see what they're doing with it through the Chicago or the J4X at Dukascopy. And you see there generating a red, which is cool. You see the white line has pierced the dashed line. Okay, you know, is that what I told and say all the time is this is the most important part of this whole concept here. And at the same time, you can see our math. Let's see right there. See our math doing the same exact thing, like that. There you are. So what we try to do is, you know, our math we find to be enormously superior to every other form of math on the planet. I've looked for decades. I've tried to find somebody better, you know, because believe me, if I could find somebody better, I would use my math and their math. Trust me. And you know, accuracy is the best thing that I like to chase after every day. So just creating this combination has been a real great success as far as I'm concerned. You know, it really does a great job. It helps you using the J4X, helps you using any particular product you're using. Trading through Dukascopy, you can generate this whole little system. It's very easy to do. You know, we've shown many a time how to put it together, and so that's why we bounce back and forth to these two different charts. We know this one is the primary chart. This one is second to none. This one now, it becomes a major competitor to any product on the planet, and it actually follows in the footsteps of my daily right there. So just the reason why we bounce back and forth, just to give you a good idea of what's going on there. Let's see, where are we at now? So that's Canadian. And when we get done looking at the Canadian, what we do is we usually shift over to oil, because the Canadian is influenced by the oil market. It's influenced by the metals market because it's a big producer per population. 30 some odd million Canadians or 40 million Canadians, and it produces 3.5 million barrels a day, and it produces I think it's second to South Africa in gold, and maybe number one in silver, and very productive. Very productive. All right, so now what we'll do is we will drift over to the gold market to start off with. Well, usually we go to oil, so we'll do oil market first. And there's West Texas Intermediate right there. And due to the fact that we see the strength in the Canadian, when it's going down, it's getting more valuable against the dollar. You can see here, oil was firm. Now it's trying to back off, but you can see the work is turning right up right now on the J4X. So then what we'll do is we'll drift over to, what we'll do is we're going to do this. We're going to throw Canadian back up again. And we're going to go take a look at gold up on, we'll take a look at oil on the Chicago Quant. This way we have a view of Canadian. That's what's fun about having both chart systems right there. So there's, you can see this, Canadian's looking more valuable. And then we go over to the oil. Right there, you see oil is going down in value. It tried to go up. We looked like yesterday we were going to be in a buy, and then it choked. It just choked. That's wrong. That's got to be moved over. Down there we are. And so it choked. It just rolled over on us, and it just has not been able to get into the buy. We thought it was going to get into the buy, and it just rolled over. Let's just save that. And you know, we can see it's trying to turn up. And just as we look at oil on Chicago J4X here, right there, you see it trying to turn up here too, same way. This is like what it's doing on Chicago Quant. See, right there. We can widen that out for you. Just trying to give you a good example of how well they work together, how good this is right here on the J4X. All right, now where do we go from here? From there, we go and look at the metals complex. Right there on Dukascopy. You can see they've lifted up gold a little bit in here. I mean, you know, you would assume so, but you don't assume anything in this era with quantitative easing. You can see there the gold has popped. Let's see, move that over, give it a refresh. It's got its green dot going. It's trying to get into the buy. We're just waiting for this to fill in. There we go. Same situation, trying to turn up. It'll straighten out here. The Hikiashis will join in another couple hours. And the more shorter term, if you use like an hourly chart, you're a 4-hour chart person, you know, I'm sure you're going to see even a better dynamic. Like there's 4 hours. See how it's showing the strength. It showed you the strength right there, so forth. You know, we just try to compare it to the dailies. We're trying to give you a overall tool for you to use. Here's an hourly, and you can see the strength there, and then the failure, or not failure, but the challenge and the Hinkiashi and so forth. You know, it helps out, and still delayed process, but it helps. And as I've said over and over and over again many times, it's the relativic way we look at the two stochastics that make it a major leading indicator. That's what Doc does. He's using relativic type of mathematics. And so that's what we do, is we take a common indicator that's considered a lagging indicator, and it is more successful than, you know, all the leading indicators that market technicians associations across the planet say it is. When you put these two together, I don't know if there's anything better in the public arena. You know, something that's a code that everybody knows, that type of thing. All right, and so that's what we see, the action with the Canadian. You see the Canadian picking up value, gold is picking up value. Interesting that oil is not. And I guess they just figure it's going to be less money out there to move around or something like that. So they must be interpreting it that way. Now what we do is we go from here, we go back over to the currency arena again, and we look at 4 other currencies. Let's see, where is that at? That would be right. Let's see, first of all, you need to move this over to there. There we are. And let's take a look at the ruble. I think we go South African Rand to start off with. So what we're expecting to see here is the South African Rand going down against the dollar, so which means it's gaining in value. And you can see that it is down now. There it is. That's good. And it's trying to come out of that weekly buy, which is a bearish mode, and be a bullish thing for the South African Rand. In other words, less to the dollar. And so it's trying to roll over in here. You can see we've been in a weekly buy for a while here. A lot of this is part of Mr. Zuma's action, so it's been a little hard to correlate it all the time with the gold and the oil and the silver and so forth. From there, we slide over to the ruble, and there's the ruble. The ruble's been moving up, and we were at a weekly buy up until this week, and now we are dancing with the weekly sell, which is very curious. And we're even dropping underneath the time manifold. So a daily sell number up there could be really, really good short. be very, very profitable. And so far we're not getting that. You know, we've been in the buy since, I guess it's right here. So you're not short anymore. Right there. We got the volatility signal right there. And then we confirmed it on the opening of the next bar. And so it was, you know, it was a good move up. You know, it's moved from 73 to 73.85 and went past 74. So that's been very impressive. At the same time, you couldn't be long solely because this white line has, and the histogram has, you know, been minus. So it's a neutral in our world. We watch this and we say, okay, you'd be neutral. Now, obviously, if this goes into a red dot and a sell, then it becomes very clear sailing on the downside. Now let's just take a look at that through J4X. Where's the rub? There it is right there. There we go. And you see that pressure is there. You can see it's lower than yesterday. It's trying, that's for sure. Right there, it's lower than yesterday. And it's been really pushing down on the weekly. So long-term money has been looking at it and saying, no, I think we're more bullish on ruble again. In other words, when it goes down in value is a bullish thing for ruble. And as you can see on J4X, let's go back to J4X, you can see that curve that's happening just like our curve right here. And that's because we've taken our math formula and smoothed it with a stochastic, so it has that characteristic. Alright, what else can we say about that? Guess that's about it there. Interesting to see the ruble starting to break down. We want to see that daily to do it. And then from there we jump over to the Mexican peso. Let's see what's going on with the Mexican peso. And right, where are you at? Right. It's around here somewhere. There it is. Now that's doing the same thing. It's breaking down. And the weekly might get through there by the end of the week. It's hard to say. We'll see. And then let's look at it on J4X. We learn from both. We're getting a red, which is neat. Just shows you how long it's been weak for hours. And you can see the line turning down. It's getting ready to pierce. See, just like ours. And what else can we say about that? The weekly still needs to get knocked down more. I'd like to see it get through this time manifold right there. And once it does that, it could be giving us a very good signal that it's heading south. Let's see. All right. Let me think now. What we're looking at here. So that's the peso. Now let's drift over to. I'm doing physics at the same time. I just answered somebody in physics. Where are we at now? Let's go to. See, we did ruble, we did South African rand, and we've done the Mexican peso. So what's left is the Japanese yen. Let's start off here with the yen. Right there. See how that fills in. Strength. Strength. Okay. And then obviously the value is rising too. It's higher than it was here. So yes, strength and strength emphasizes strength in the price. There we are. And then let's jump over here to Chicago Quad. Let's see, right there. We've been in a daily buy. We saw our volatility signal right here. Let's widen this out more. So we saw the volatility signal. Oh, wait a minute, where's the green dot? Did it just disappear? That's interesting. And then it goes into the buy here, so that's cool. And you can see the weekly also doing the same thing. It's pierced this area here. It's been strong too, so it's been a good short-term buy. It's not one of those blessed ones unless you're using binaries and options. But when you're using hard delta, then we always say, well, get in and get out of it. Take your profits all the time. Don't carry it overnight. But once the two are lying together, we usually say, you can risk being long overnight solely because the odds are 8.5 out of 10 that it's going to be accurate. So it works that way over the last 40 years. And I think we've back tested it in other products like 90 years. And in physics, we've back tested it. It works over 37 million years, so forth and so on. All right. Where are we at from here? Okay, so this is the end of it all. This and usually this also shows when this this kind of moves with the dollar in a sense. It is a dollars pairs trade. So obviously, as it's going down, the dollar is going down. Just like when we look at dollar Swiss, when it's going down, the dollar is going down. That type of thing there. Now, where do we go from here? From here, we jump out of the currencies again. And then, remember, traders, if anybody wants to see something in a currency that we haven't mentioned or we have mentioned, you can just shout it out on the chat line, and we'll go back and look at it. We don't have a problem looking at things twice or three times, believe me, in one webinar. Because you never know. Remember, we're proactive traders nowadays. We're not reactive traders, so it's not much. When you're a reactive trader, I've been posting that a few places because I'm tired of hearing these people try to tell you how much money they made being, on a trading desk or on a floor and how much they can teach you. I'm thinking to myself, those days are gone. They don't exist because those days were reactive. They had clients coming at them. They were leaning against the client's trades, and they had a head start. Whereas now we are all proactive. That's why trading desks are like down 80 or 90% from what they used to be. After quantitative easing, they've really pared back or just shut them down altogether. And so, you have to have a different attitude about trading. You need to find tools that are going to help you that are proactive tools, not reactive tools. That's why we show you the battle between the relativistic style of looking at two different stochastics and so forth. In other words, you need things that are really leading or super leading indicators. Very few super leading indicators out there. There's some leading indicators. They say the MACD is a leading indicator. They claim that the stochastics, this is the Market Technicians Association who claims these things, and they say the stochastics is a lagging indicator. It's behind the MACD. But when you put two of them together and you look at it on a relativistic fashion, then you find out that not only is it a leading indicator, it's a better indicator. It's a super leading indicator above the MACD, more accurate all the time. So that's why we discuss it this way. That's why we show you JForex. We show you that so that you can see, besides the fact that it's the platform of Dukascopy, we show you that we can take that platform and make it a successful trading tool. And that's the whole idea. Because we're not, not even Dukascopy is a reactive situation to a great extent anymore. Almost nobody is. Everybody has, which makes markets tougher. They're not, it used to be a time when you had dozens upon dozens of trading desks filling orders from their clients. And so it was a reactive game. It's not that much anymore because the trading desks have disappeared. And proprietary trading for institutions have just disappeared. And so what you have now is just funds getting filled in black pools, hiding, so that you can't tell what they're getting long or short. You might not see the execution of it a day or two later. You might take 3 days before you see the execution. Used to be the SEC would allow it to be at the end of the day. The CFTC would allow it to be at the end of the day. Now, sometimes they don't update it for 5 or 6 hours after the end of the day. Sometimes they don't update it for 2 days after the end of the day. Sometimes they never update it. So we're in a proactive world where we need to investigate things through a algorithmic or a quantitative way, and especially a quantitative way, like our work. And so you must look at things in a much different fashion. All right, where are we going from here? That is the yen. Now we're moving over to, we'll take a look at the metals complex a little bit more in depth, because that's used as a currency. So we will slide over to, let's see, where we go? I think we go over here. So we're going to take a look at like silver and platinum. Check that out. But again, if anybody wants to see anything particular, no problem. We'll be right there. Now you can see there's the gold. Now we're back into a red dot again. See, it's just vacillating back and forth. I'm going to give it a refresh. Now it's gone again. You know, and so it's it's backing off from the highs. And why not, real quick, just take a look at the stock indices, see if they're backing off. Not really. That was 51 plus, now it's 56 plus. The Dow Jones Industrial Average was 61 plus, now it's 119 plus. The S&P 500 was a 6.5 plus, now it's 12.25 plus. So they're buying these stock indices to compensate for the inflation. That's what they're doing there. Now we're going to zip back over to the metals complex, take a look at silver. And there's silver. Let's give it a refresh. Still got a little green dot going on right there. We'll widen it out. You can see we've been in the daily sell since up in here in the 26s, 25.75 area. And now we are flirting with the 23 area. We've been in a weekly sell on this poor thing. You can see that on the fact check spreadsheet. That's what that fact check spreadsheet is, traders, right there. So silver is number 9. So we're 13 weeks in a sell. And we are 5 days in a sell. So on our daily, day buy, day sell, week buy, week sell. You know, that's how long they've been in that signal in our work. We have a fact check spreadsheet every day live to the marketplace. Matter of fact, what's wrong with this is that they put crude oil into a buy last night at the close. Let me get rid of that. And then this morning we find out crude oil is not in the buy. They changed it about at 8 o'clock Eastern Standard Time, 3 hours after the market closed. I'll show you right there. And so now we've been in a sell for 2, 3, 4 days now. Good old black pools, you know. And that's the action we see. Oh, let's go like that. Let's see, where is it? So it's right there. There we are. And what we do is just close that real quick. There we go. Oh, I'll move this up on the screen there. Just put them up on that. And then we'll go File, Open, and we'll take a look at the silver's contract and the platinum contract. Take a look at the metals and see how they're treating it. As our thing spins there a little bit. That's all right. Ah, there's middle age. Maybe an end of the year rally of the first of the new year in the market. Metals doc. Quantitative easing has really taken the. You would assume, like Robin and I just keep on thinking about it, and we see information coming in, like you do, and so forth. That we see strength at times, but overall, like right here in the silver's contract, you can see that I think it's actually down for the day now. So yesterday they have a settlement of 23.38, and right now it's trading at 23.38. So it's actually unchanged from yesterday. No, we settled at 39.20 on the 10th. And today's the 11th, and now there we go. We're just touching. We're almost plus for the day. It's minus. We got a green dot. It's trying to lift. You can see our work turning up. The idea that we could see towards the end of the year or next year, anything is possible. There's no doubt about it. But right now, when I say anything, there's no doubt about it. There's a possibility. Yeah, there's no doubt that there's a possibility that sooner or later, real markets will react correctly. You know, in other words, right now the central banks push this product down. They use it as a surrogate for dollars. So when they want to be short dollars, they buy this, but they don't do the currency conversion. So in other words, it makes them short dollars. So you know, what we're seeing in the metals complex is that we have, it's a double-edged sword too. Funds write their manifesto. Excuse me. They write their manifesto. Let me take a sip of water. The incorporation manifesto says, you know, if we see inflation at 1% or 2% or 5%, you know, we're going to be buying, you know, appropriate products for the inflation factor, and then they label it in their incorporation. What are the appropriate products? Well, puts are one, sell calls is another. You know, buy puts, sell calls, or buy silver, buy gold, buy platinum. They usually say stuff like, we'll buy precious metals. They may say what percentage they might, you know, these funds. There's thousands of funds out there with billions and billions and trillions of dollars total. So they step up, they do the buying that they have to do so they don't get sued. Doesn't matter if they're making money every year or not. They'll get sued if they don't do what their manifesto says they're going to do. So for them to get going, you know, in other words, get into a weekly buy, which, what's it on the fact check spreadsheet? 13 weeks now? Right there, 13. Oh, I think I already emphasized that, didn't I? So silver is, you know, 13 weeks in a sell and 5 days in a sell. Gold, on the other hand, is 9 weeks in a sell and 5 days in a sell. And what's platinum? I think platinum's up top there. Platinum is 14 weeks in a sell. Okay? Because we don't follow platinum that closely, so we're not even paying attention to the daily. So yeah, Middle Age says, you know, maybe an end of the year rally or first of the new year. And, you know, as long as there's quantitative, I guess you have to assume that things are going to stay relatively the same all the way up until, I want to say, the primaries in 2022. So I'd imagine by April or May going into June, we're going to start to feel how the House of Representatives is going to switch. Is it going to switch with a super majority of the Republicans or just a big majority of the Republicans? Either way, it's going to switch in that direction. We know that for sure. They have not won an election in the House of Representatives, I think now for, the Democrats have not won an election against a Republican in almost 2 years now. So, in other words, let me think how I'm phrasing that wrong. There are Democrats who've won, but Republicans keep on winning more. In other words, they're not taking any seats back, the Democrats, for almost 2 years now. They keep on losing seat after seat. Even after this last election in 2020, Republicans were only -7. They had won something like, I don't know, 29 seats more, and they were only 7 seats away from controlling the House. As people left, as Democrats have retired or died, you know, from old age, because remember, Democrats are much older on average than Republicans are. You have, we've won 4 more seats. So they only have a 3-seat majority now. And so I would assume, and there's another election coming around the corner in Ohio, and what was considered a Democrat seat is now considered a toss-up. So, you know, the majority might be 2 very soon. You know, it keeps on going. Who knows? The Republicans may get control of the House before the next election even. You know, I mean, it just keeps on going that way. So, let's see. Middle Age says, Euro against the dollar at support on the daily and weekly charts. Yeah, let's go back and look at that real quick. Right here. There it is right there on Chicago, and right here on J4X. We'll slide that in there. Right there. Whoa, what is that? What happened there? What's that all about? Okay, there we go. Alright, so, I don't know what that line is. What's that called? Pencil? How did the pencil get in there? I have no idea what that's all about, but I'm just going to leave it there for the moment. All right, so you can see here it's trying to turn up on the J4X. On the Chicago Quant, we're an up bar candle, but still red. Let's give it a refresh. Yeah, still red, and trying to get into a buy. We've been in a weekly sell on that product. That's line 20, is it? No, 14. That's it. Line 14. The euro against the dollar, we have 9 weeks in a sell and 6 days in a sell. So as you take a broader look at it in our mathematics, let's see, let me use this mouse. You can see it went into the weekly sell right there, up in the 120 something area. What is that? That's 122-ish area, basically, a high of 121.93. So it went into the sell that week, somewhere in there between 122 and 121 something another was the weekly sell. And it closed obviously underneath it on that Friday, confirmed the sell, was in the daily sell the day before that, and it was winner, winner, chicken dinners for weeks. And then finally got a buy down in here with a volatility bounce. End result is that we're still in that weekly sell. We went into the sell here, and went into the sell right here. And again, another winner, winner, chicken dinner for over a week. Up in the 118.65 area, basically, I guess you could say. And it fell all the way down to the 117 even almost, 117.06. From where? 118s and change, up in here. So, yeah, it's kind of, is it really bouncing along the support? I guess. I don't know if we've identified it. I guess we have a channel. Yeah, I guess we do. See the bluish? I guess we should make that red, like we did with the Swiss. That must be the top part of the channel that we've been watching for a while that it's been respecting. Yeah, see how it does that? It plays with that channel on the top and stops. So I guess that's the resistance up there. Now, I'd imagine you can say from August of last year, right? Or is that 19? I think that's 19, isn't it? No, it's 20. So basically, it's been playing with that bottom end of the range. Let's put that in. Whoop, that didn't work. Let's try that again. Right there. So there we go. Yeah, you're right. We're playing at the bottom end of the range. So the classic, central bank thing where they find a way to bounce out of that area. If we contract it a little bit, I guess you can see it better. Like right in there. Funny how the red dots and green dots are on top of it. So yeah. Dollar index looks like, let's go take a look at the dollar index. Right there. It's trying to go into a sell today. You can see it's been in a buy for a couple of weeks and was in a daily buy from here and ran up from the ETF ran up from the low 24s to the high to the 25s, So it's showing today it's showing the weakness, which kind of makes sense, I guess, interest rates, let me think. I bet we go over to the interest rate market and we'll see the was it the 30-year? Where's the 30-year? Right there. Still rising. So remember, when this bond future rises, interest rates are dropping, which makes the dollar drop. That's normally the way it goes, Oh, no problem. And that's where we're at this moment in time. All right, I guess we're at the end of the game here, traders. We will, unless anybody wants to see anything particular, we'll jump out of here and catch you all tomorrow on Thursday. Today is Happy Hump Day. And we'll come up with a title for this. We got to come up with some type of title. If anybody's been watching the whole webinar, let me know what you think the title should be. I'll wait a minute here, and I'm trying to figure out what we should call it. I think we were looking at, how did we start this off? We were looking at the inflation. Was it the inflation number that came out? I think that's what it was. It was the inflation number that came out, right? Let me just double check. Was that CPI? Let's see, CPI. Must have been CPI. Oh yeah, core CPI slows as soaring used cars and rent costs decelerate. Energy costs accelerate. Okay, so that's where we're going to come down to is how, the Swiss and inflation. I think that's the way we're going to look at it, or Forex and inflation. I think that's probably the best way to look at this webinar. We did talk a lot about how the inflation affects funds, how it affects currencies, the whole bit. We looked at it that way. So I think we'll label this as inflation and Forex. I think that's a good way of describing it. All right, this is Doc from North America. We will catch you all on the flip side tomorrow. Happy trails to you until we meet again. Happy trails to you, to all our trading friends at Dukascopy and the world. Ta-ta for now.